So let's begin with taxation of mutual fund income. Right. So here we have the pass-through status, means that taxes are paid only by the investors, not by the fund itself. This would also be related to the turnover rates, okay, turnover rates. Because the mutual fund manager will be handling the portfolio composition for the buying and selling of the different stocks or equities or the financial assets in the mutual fund. So for an investor, we're really not able to time for the tax preparation, right? So everything is passed through, right? So even for the dividend, for the capital gains, for the tax advantages, all right? So pass through, okay, that's what it means, right? So the mutual fund manager with more turnover rate, it means we are less unable to control for the tax issues. Now, unless we are actually interested in somewhat for the fixed income mutual funds, in that case, the timing will become very simplified because for the fixed income mutual fund, the dividend will be paid on a regular basis, so the tax planification will become very straightforward. All right? So let's take a look. All right? So here, a high portfolio turnover rate can be particularly tax inefficient. Well, exactly, right? Exactly. Because everything is managed by the mutual fund manager, and as an investor, we can only obtain the net asset value as the way it is, minus all the fees and costs involved in the mutual fund subscription, and then we can obtain the return, whatever is left, okay? So here, the turnover rate will equal to trading activity of a portfolio divided by the asset of the portfolio, okay? So one example, a 100 million portfolio with 50 million in sales of some securities. The turnover rate will then equal to, by taking 50 million in sales of some securities divided by 100 million of the portfolio, so the turnover rate is 50%, all right? Not extremely low, okay? So, somewhat, at a high turnover rate, right? And then with the concept check, let's take a look. An investor's portfolio currently worth 1 million. During the year, the investor sells 1,000 shares of Federal Express at the price of $80 per share and 4,000 shares of Cisco at the price of $20 per share. The proceeds are used to buy 800 shares of IBM at $200 per share. What was the portfolio turnover rate? So let's take a look. We take 1,000 shares of FedEx multiplied by $80 per share plus the 4,000 shares of Cisco multiplied by $20 per share. We want to know the value of the portfolio. Divided by 1 million. Okay, so the turnover rate is 16%. Okay, 16%. Compared to the previous example at 50%, the 16% would seem more reasonable. Okay, with FedEx and Cisco. All right, for a portfolio of a size of 1 million. Now, how about for exchange traded funds? Let's take a look. We have some examples: spiders, diamonds, cubes, and webs. Okay, they have different names. Okay, for investors, for an easy identification and memorization. So we know what spider represents, what diamond represents, cubes and webs. Now, these will be mostly offered by investment banks, okay, or investment companies, and they have these specialized products or ETFs for investors to choose from. So the advantage of the ETFs, okay, over conventional mutual funds that we're so accustomed to, all right, is that it's traded continuously, okay, on the stock exchange, can be sold short or purchased on margin, all right, because it is listed on the stock exchange just like any stocks. So the ETFs would have many more advantage than a regular mutual fund. With a mutual fund, you can only purchase and invest or participate with cash or through your credit cards, okay? And then for the ETF, it is tax efficient because by looking at the example that we just saw earlier, the higher the turnover rate for a mutual fund or a conventional mutual fund, the less tax efficient it is for the mutual fund. And that will also indicate, the disadvantage for tax planification for investors. But with the ETFs, we can actually time the tax planification, and it is actually tax efficient and, of course, with lower cost. All right, since it is listed on the stock exchange, we're actually eliminating the administration fees and expense ratios for the mutual fund. Now, disadvantage must be purchased from brokers. Well, yeah. And then the prices can depart from NAV. Exactly, all right? With the examples that we showed earlier, okay? The ETFs, they're not listed according to the net asset value. Instead, they have the what we call the premium or discount. And these premium or discount will change on a daily basis or on a continuous basis whenever the stock exchange is operating during the trading hours. A few products, okay, for us to take a look. We have the sponsors, Merrill Lynch, Vanguard, State Street, all right, and with the different product names like Vanguard ETF, BlackRock Global Investor, we have the iShares. Merrill Lynch, we have the holders. That'll be for the holding company depository receipts, and it is abbreviated as holders for short. State Street, Merrill Lynch, we have a selected sector SPDR. That'll be S&P 500 depository receipt, and they will call it SPDRs for short. Right? And samples of ETF products. All right, we have the for the U.S. indexes with a different ticker. SPDR, SPY, Diamonds, DIA, Cubes, QQQ, iShare Russell 2000, IWM, Total Stock Market Vanguard, VTI, and the index that are actually being tracked, S&P 500, Dow Jones Industrial, NASDAQ 100, Russell 2000, and Wilshire 5000. So we can actually, be very clear. The ETFs pretty much they would track or concentrate on the indexes itself. And this will be very convenient for beginners, for amateur investors, or for investors who do not have that much time to focus and concentrate on the research and analysis of the stock exchange or of individual listed companies. So ETFs, not only time efficient, but also cost efficient. Industry indexes, we have energy, we have financial, we have the, so mostly energy and financial, and this will be the trend of the current ETF development and also for the future prospect of the different industries. All right, so we have Energy Select SPDR, iShare Energy Sector, Financial Sector SPDR, iShare Financial Sector, and I'll be tracking Dow Jones Financial Companies, S&P 500 Financial Companies, Dow Jones Energy Companies, and S&P 500 Energy Companies. Now, there's also, for the international indexes, we have the UK, France, and Japan. And they'll be focusing on MSCI UK Index, MSCI France Index, and MSCI Japan. And like we mentioned earlier, in Taiwan, we also have international indexes cross-listing between Hong Kong and Taiwan, and that'll be one example. Right? So ETF market is actually growing, growing with the popularity and wide acceptance from individual investors and also institutional investors, and with the benefits that it could actually outperform the traditional or conventional mutual funds. Right? Okay, and how about for the information on mutual funds? Where can I look for information? Now, one of the most important information would be the prospectus. The prospectus is the official document that every mutual fund must register with the SEC, Securities Exchange Commission of each country, right? And then the prospectus will list the statement of investment objectives. It could not be changed no matter what happened unless the mutual fund is actually filing for a closure or for liquidation. Then the investment objective could be changed, and that will be a new mutual fund being established. Investment policies and risks, will be included to indicate how risky the mutual fund is. Now, usually with the Morningstar, or with other mutual fund rating companies, we might have 5-star, 4-star, 3-star, 2-star, or 1-star. And with the different stars, they will also give a different ratings of the risk. So it could be high risk, low risk, moderate risk, okay, or medium risk. And then there's also the investment advisor and portfolio manager, all right? Now, the portfolio manager will be, the mutual fund manager. Depending on the performance, the mutual fund manager might not be always the same person or the same manager. So the mutual fund manager, depending on the performance, all right, will be evaluated on a periodical basis to see whether the mutual fund manager can remain on the position and to manage the mutual fund, right? And it's very likely, that some of the bigger funds might have more than one mutual fund manager, and for a smaller mutual fund, the mutual fund manager might be replaced either frequently or infrequently, depending on the terms. But usually, we don't recommend for a mutual fund manager to be on the position for too long, right? And costs and fees, all right? What are the costs involved in the mutual fund, and what are the fees, okay? For example, the front-end load, back-end load, expense ratios, okay, and the commissions for the mutual fund manager, etc. Now, we also have the Statement of Additional Information, SAI, that we have securities in the portfolio at the end of the fiscal year to see the composition of the mutual fund. We have the audited financial statement, all right? And we have the list of the directors and officers, okay, who are involved and who are actually managing the mutual fund company and the mutual fund. And the brokerage commissions. How much of the money was actually paid for brokerages, right? Now, so for the additional information on mutual funds, we have Morningstar, okay? We can go to the website, www.morningstar.com. This is a very well-known international mutual fund rating company. It will give you the ratings of different types of mutual funds around the world and in many, many different countries. And we also have the Investment Company Institute, www.ici.org, all right? And also Yahoo, okay? Yahoo, one of the most convenient ways for investors to obtain information, all right? There's also a section on stock market and also on mutual funds and ETFs as well, all right? So finance.yahoo.com/funds and directory of mutual funds, all right? So nowadays on the website and also on the stock exchanges, they have different icons, different sections for investors to choose from. ETF section, mutual fund section, stock section, okay, and many, many more. Right. So with the section summary review, first of all, the pass-through status means that taxes are paid only by the investor, not by the fund itself. So it means that if a mutual fund has a very high or extremely high turnover ratio, it means that everything is actually being handled and taken care of by the investor, and the mutual fund manager will just continue to do the transactions. Right? So it's pass-through status. And then point B, high portfolio turnover rate can be particularly tax inefficient, like what we mentioned. So the turnover rate is actually calculated by taking the trading activity of a portfolio divided by asset of the portfolio. And we have examples, okay, of the ETFs, spiders, diamonds, cubes, and webs. The advantage over conventional mutual funds for ETFs, of course, continuous trading can be conducted with margin trading for short selling or margin purchase. Tax efficient, definitely, and lower cost, of course. And the disadvantage must be purchased from brokers, and price can depart or different from net asset value, either at a premium or at a discount. Right, and then we also have the fund prospectus, will be the most important document for mutual fund, and the statement of additional information. And with the sources, Morningstar, Yahoo, Investment Company Institute, Directory of Mutual Funds. Now, can you answer the following questions? How is tax collected from mutual fund? Where do I obtain information? What is the high turnover rate mean? Okay, and what are the other investment alternatives I might have other than a conventional mutual fund? How about the exchange traded fund? I'm Professor Yang. See you next time.